Welcome to today's video. My name is Madelon Vos and this is Madelon Talks. Today we'll discuss the most important crypto and macroeconomic news of the week. We will start by diving deeper into the arguments between Peter McCormack and Elon Musk about the renewable energy usage of Bitcoin. After their argument, crypto Twitter exploded. And I really want to tell you why this doesn't make sense at all. But we will also dive deeper into the price movement of Bitcoin because the Bitcoin price started going down after the argument. And Plan B tweeted about this with his statement. So we will dive deeper into that. Besides that, the dollar value is at its lowest point, and the former banker warned us about what is going on when it comes to inflation, and he suggests that central banks are not really sure what to do, and he knows why. So we're going to dive deeper into that at the end of this video. We will also take a look at the chart of Bitcoin, but for now I will make myself a little bit smaller so we can start with first things first. But if you haven't subscribed to this channel already, make sure to do so. Just click on the red button down below. I've had a couple of followers that said I have to resubscribe to your channel, so make sure to check if you're still subscribed to the channel, and also press the bell so you will get notified when there is a new video online. Okay, we're going to start with Peter McCormack's arguments about Elon Musk supporting trolling on Twitter and supporting Doge. And yeah, so he said this: "Dear Elon Musk, the perfect troll is one where people don't know whether it's a troll or not. Your recent poorly informed criticism of Bitcoin plus support for Doji may be the perfect troll. Or you might actually believe this. God, I hope not." And then there was a whole thread about what was going on and about people DMing Peter McCormack that they want to get out of Bitcoin, want to get in Dogecoin, they wanted to buy it, and okay, the whole thread ended. And then there was Elon Musk, and he said that this thread made him wanted to go all in on Doge. And what you have to know about this is that this happened in the weekend, so there was no one to take care of Elon Musk. There was no marketing team online. There was no one that knew that he was going to tweet this. After that, he deleted some of his tweets, and to be honest, it doesn't make any sense to me. I will explain why. I tweeted this already. Why did Elon Musk in the first place buy 1.5 billion in Bitcoin with Tesla? Why did he do that? Of course, if you do the biggest purchase, the biggest known purchase from with your company, with Tesla, and you end up with selling 10% to prove liquidity, and you end up with earning more with Bitcoin in 1 month than in 14 years with selling Tesla, how can you come up with the conclusion that Doge is the preferable crypto? But you're telling crypto Twitter, that you're not going to sell Bitcoin. I don't know what's going on, to be honest. And we saw him tweeting, "Hey, cryptocurrency experts, ever heard of PayPal? It's possible. Maybe that I know then you realize about how money works." And of course, he's the inventor of PayPal. And he said, "I know how money works." But to be honest, I'm not really sure if he knows what's the difference between the second layer and the first layer application. But in the end, it doesn't really make sense to me. This is just another guy yelling at Bitcoin, and he is scaring people. He is, let's go to this tweet. What Mark van der Schijs said. He said, "I passed by the Tesla store today and I felt distinguished by the brand. I still think Elon Musk is a genius, and he really is a genius. He is an inventor. He is a great marketeer and a great entrepreneur, and he knows how to make bad publicity, because bad publicity is also publicity, and people can rather have an opinion about you than don't have an opinion about you. And he said, but he seems unstable. And Mark tweeted earlier this month already that he had unfollowed Elon Musk on Twitter a couple of months ago. I think it was in 2020 still, but many small BTC investors got spooked and lost money because of him. His Doge remarks seems self-serving and could lead to a lot more people losing their life savings. And he is not educating people about what a digital currency should look like. He is more in it for making money. I'm not sure, but this is not the way you should act when you have a lot of followers. And to be honest, Elon Musk has over 50 million, 53 million, I think, in followers. And if you have an audience, you must be really careful what you tell them, because even though you say this is not investment advice, even though you say I'm doing this, people will always follow you. And even I, with my super small followers amount on YouTube, on Instagram, on Twitter, I always keep in mind, what will people think when I will do this? Will they respond? Will they react with their savings or with their money? Will they do something? Will they invest different? I don't care about what people think about me, but I do care about what people do with their money when it comes to my opinion. So on Monday this happened. On Monday he deleted some of his tweets when he responded to some scammer or so. I'm not really sure who he was, but people spoke about that he was a scammer, so he deleted some tweets. And of course he spoke with his team at Tesla. It spoke with his I think he probably has managers or something like that. So they will advise him not to be on Twitter anymore. But this is a free market. I've had a lot of interviews over the last couple of days, and people ask me, Madelon, explain if we need some regulation on this point. And we've seen, for example, Kylie Jenner talking on Twitter that she didn't use Snapchat anymore, or not that much anymore. And after that, the price of Snapchat went down with 2%. And for example, when Trump tweeted about taxation on a big company, and the stock price of that company went down after Donald Trump tweeted. So keep in mind that people with a several amount of followers, with an influence, can always influence prices of stocks or prices of products even. So we must keep in mind that Elon is just another guy yelling at Bitcoin. And please do not panic about this. It doesn't make sense. And also, ARK Invest commented on what Elon Musk said earlier this week. He spoke about the energy consumption, and especially the renewable energy consumption. And he said that that's why he is not using or accepting Bitcoin as payments for cars anymore. And ARK Invest responded with the following: in our view, the concerns around Bitcoin's energy consumption are misguided. Contrary to consensus thinking, we believe the impact of Bitcoin mining could become a net positive to the environment. So he's saying that this whole Bitcoin argument could even have a positive net return on the environment, because Bitcoin could act as a subsidy for what's going on right now with the banking system, with the paper money system, with government systems that could easily go away when Bitcoin is accepted more and more worldwide. This is the last thing we're going to say about Elon Musk, and we're not going to speak about him anymore. Then we have Michael Saylor, and Michael's strategy did last week, of course, another purchase of 15 million at an average price of, I think it was 55,500 or so. And he's DCAing every month. He's every month buying 15 million in Bitcoin. And right now we see that he also bought the dip. MicroStrategy has purchased an additional 229 bitcoins for 10 million in cash at an average price of 43,663 per bitcoin. This comes to a total acquired amount of bitcoins at 92,000, which has a total value of 2.2 billion and an average purchasing price of 24,450. And his strategy is really smart. Actually, what he's doing is he's buying in the beginning. He bought once like 1.2 billion, I think it was. He bought once, and then after that he started doing DCA, and now he realized he also wanted to buy the dip as well. So this is a great strategy. You can do this at home as well. I'm not a financial advisor, you know that, but to be honest, what he did was buying once and buying every month and buying the dip. So in my honest opinion, this is great to have a really low average price and remain a low average price. So Michael Saylor bought again. By the way, we saw that the guy who went short on The Big Short. Oh, by the way, you should watch that movie, The Big Short, if you haven't watched it already, which you probably have. But that guy who went short on the housing market is now shorting Tesla. So this is a great one to keep in mind. But for now, Plan B is at OK. We're moving on with the current volatility, BTC at 4.4K and transaction volumes high. Momentum is still up and onward. So we're still in this upward trend, even though you see that this is the May dot, and we still have to end May, of course. We're not at the end of May. We're right now halfway, a little bit past halfway. So we have a couple of more days to end up higher, maybe even lower. That could also be the possibility. But as we see here, in 2013, we went down quite a lot. And after that, we started to rise pretty slowly. And after 4 months, we hit a new all-time high. So we're now 2 months in a row going down, and here we have to form a bottom if we want to stay in between the 2013 and in between the 2017 levels, because in 2017 we saw just one dip on the radar and then we hit a new all-time high already. So if we are in between 2017 and 2013, we still have, let's say, 1 to 3 months to hit a new all-time high, and here it was just 1 month. So 1 until 3 months to hit a new all-time high if we're still on track. And I must say it's still like clockwork. Thanks for the update, Plan B and HODL. When looking at the RSI, this is a chart he often posts as well. And the RSI is the Relative Strength Index, which measures the momentum in the market. And usually when it comes to RSI, you have the 70 level and the 30 level. And if we come below the 30, we are at an oversold level area. And if we come above 70, we're at an overbought level. So we have been quite overbought for some time. And I must say this is a bit different from the normal RSI. We can even say that below 50 we're oversold and above, let's say 90, we're overbought. But right now we're sitting at around 67.71, and we have seen this in the bull run of 2013 as well. I analyzed this in the crypto community on my Discord channel, and I spoke about this in a recent video, what happened here. And here you can see those 4 months, 3 to 4 months that happened before the price went up. It was 3 months. Here we had a new all-time high already, but the RSI was still quite low. And here we see that we went down a bit as well. Here we went down on RSI, here we went down on RSI, and even here we went down on RSI. So we're now still in between 2017 and 2013 levels, but this doesn't mean that the bull run is over. I've been asked so many times lately if this was the end or if this is the end of the bull run, and in my honest opinion, nothing fundamentally has changed. Nothing has changed over the last couple of weeks when the price started to go down. The only thing we have seen is that Tesla is causing a lot of FUD and that there is more FUD. One of the things that I wrote today was China bans financial payment institutions from cryptocurrency business. And this reminded me, I also tweeted this reminded me of 2017, because in 2017 this happened. And last month, China was really positive about crypto. And we had seen this in 2017 once or twice or maybe even 3 times. They were positive, then they were positive about blockchain, then they wanted to buy, then they only wanted to buy ban, sorry. I'm completely in my mind with buying Bitcoin, but I must say ban, then they wanted to ban mining, and then they wanted to ban exchanges as well. And China is all over the place all the time. So this didn't surprise me, to be honest. But after that, I was doing some research on Twitter, and Mark van der Scheijs tweeted, "This regulation has been around since 2017. The Reuters article is FUD. There are no changes in the Chinese crypto policy. Kind of scary that we now even have to fact check Reuters articles. They should publish reliable financial information." And to be honest, this was a Reuters article. This is a Reuters article. And it was published, I tweeted it 5 minutes after it was published. And this article is FUD. Reuters is spreading FUD. And we have seen a lot of FUD. We have the tax bill. We have China, we had Turkey, we have Elon Musk causing FUD, and now we have this FUD. And it comes from a reliable source, or at least I thought it was a reliable source. So we can't now even trust Reuters anymore. And thanks, Mark, for mentioning this. I didn't expect that we couldn't rely on Reuters. But we can trust Notes, and Trust Notes published an article about the dollar price falling to the lowest point since April 2018. It's the lowest point in 3 years, and interest rates are near zero, however, which translates to much money printing and thus devaluation of the dollar. And we spoke about this so often. 21% of the total dollar value was printed in 2020, and they keep on going, which has also fallen against the euro. So the dollar price has also fallen against the euro from 93 cents to $1 buying to 81 cents to $1. So that's the worst for the dollar. And I found this joke on Twitter last week, and I must say I was laughing a bit. At first I didn't catch it, but right now I get it. These scam coins are getting crazy. Someone just showed me this coin. It has a 27 trillion circulation, an unlimited supply cap. It is only one node, and 25% supply minted in the last 6 months. 1% of the holders own 30% of the total value. And if someone shows you this coin, you will say this is a scam. This is a complete scam. But this guys, is the US dollar. This is what real money looks like, or at least what fiat looks like, because this is of course not real money. Gold, silver, Bitcoin are, in my opinion, real money. The dollar isn't. This will eventually go to zero, and we have seen this with a lot of currencies. This is a currency, and currencies will in the end go to zero because they need more money to make the economy flow again, to create more economic growth. We've seen this article, and I must say I was kind of surprised that this article was mentioned. It was on Politico.eu, and former ECB chief economist warns for Eurozone debt trap if inflation comes back. And to be honest, inflation is coming back. We've seen a lot of inflation over the last couple of months, and we've argued about this forever. So the Eurozone may be destined for a period of high inflation as mounting national debt levels dampen the European. And then we had this article published on Politico.eu, and this is about a former ECB chief economists warn for a Eurozone debt trap if inflation comes back. And this is what we spoke about in the last couple of 5 videos. Central banks may no longer be free to tighten policy if needed, is what the chief economists argue. So what does this mean? It means that if a central bank needs to tighten policy, and in this case this means that we have to increase interest rates, they probably even can't. But why would they like to increase interest rates? They would like to do this when inflation is coming back. So when inflation comes back, all prices, consumer prices, are going to increase, and that will slow down the economy. So what we need to do is making sure that these prices will get a bit lower again. But to do so, the interest rates have to rise. But there is so much debt. We're living in a debt economy. Every euro, every dollar is created out of thin air, is debt. So we have the government bonds, which are debt. We have real estate houses, most of them are debt. So money is debt, or at least fiat currency is debt. And even though the central bank has always said that this is a guidance rather than a firm commitment, it may come under fire from cash-strapped finance ministers if inflation states a return and rates need to go up. So if inflation returns, rates need to go up. Prat warned, how will they react? Will they hesitate and wait for more evidence for inflation to go up? Will there be a delay in ordinary reaction function? He said, my expectation is that the ECB will stick to its inflation mandate, which is 2%. But we will only know after the fact. So, Perret pointed out to the Fed temporary raising inflation targets as one factor that could boost inflation globally and kick off an upward trend, especially at a time when governments are spending aggressively. So they might be even too late when it comes to increasing the interest rates. And we even had Christine Lagarde talk about this subject of increasing the interest rates. But why can't we increase the interest rates? It's quite easy, right? We just can increase interest rates, and then this whole inflation problem is going away. But no, it isn't that easy, because we are in a debt-based economy. Everything around us is built from debt, which means that if the interest rates are going to rise, we have to pay more for our debt. A reduction of purchases and tighter monetary policy would leave governments struggling, and over time might force some member states into insufficiency. So not only member states will be insufficient, also normal citizens who are having mortgages, also companies who are having loans for R&D, for example. That will take us back to the question whether what we have built can withstand these pressures. For example, the dollar or the euro. Stark said, referring to the viability of the single currency. And we had Mark Carney talk about the new system in Bretton Woods. But what he sees is a possible replay of the sovereign debt crisis 10 years ago, which threw global financial markets into turmoil and left much of Europe in a deep recession and millions losing their job. So these old ex-central bankers, these ex-chief economists at the European Central Bank warn for Eurozone debt trap. And they do not only warn for Europe, they also speak about the Federal Reserve. But they warn for a possible scenario in which we will see a new GFC, a new global financial crisis, which will throw global financial markets into turmoil and leave the Europe economy in a deep recessions, with millions losing their jobs, and not even their jobs but also their houses. So this is something we have to follow. We need to follow. There are some things going on about a new fiscal policy instead of increasing interest rates, which could lower the inflation as well. But we have to keep in mind that this is what we are seeing right now, and this is a real struggle, not only for us as normal citizens, but also for central bankers. And it's always easier to let ex-central bankers say that they made a mistake or that the policy needs to change than having current central bankers saying that. The past few decades have shown that it takes strong growth and tight labor markets for workers to make any sustained wage gains. Slamming on the brakes at the first sign of rising inflation is a recipe for stagnant wages and slow growth. So Jerome Powell should ignore the inflation, is what this article suggests. And probably Jerome Powell is not going to do anything with rising inflation. And to be honest, these central bankers say that they don't have to wait that long for the central bank to take action. But we will probably have Jerome Powell this week when discussing what's going on in the in our economy. We will probably have Jerome Powell just ignoring the fact that inflation is rising a bit, and probably inflation will overshoot the price targets, or at least the targets of inflation, the mandate of the central bank, but they couldn't care less. That's probably what they're going to say, because on the other hand, if you hit the brake quite fast, then you will have a slow growth, is what they say, what the school books say about this subject, and they won't take that risk. So we will see what Jerome Powell has to say, but of course it's gonna be quite interesting. Okay, for now, we are going to take a look at the price of Bitcoin again, one of my favorite subjects to do. So we will start by looking at Bitstamp. I use the Heikin Ashi candles. We have an RSI 14 days on this part of the chart, and every candle consists of only the data from 1 day. And as you see, we are testing the first high again. This was the first all-time high, and then we declined after we hit the previous all-time high of 20k. This was the first all-time high, the first of rally, and now we're testing this support line, which was first a resistance and now it is becoming a support. And this is the major support line we have to watch right now. And why is this the major support line? If we hit below this level, and especially if the body of the candle closes below the 42k level, then we have some kind of a problem. This means that we will see new lows and that we might even visit 38, 35, or even 32, maybe even 29. But if we hold this level, then we can build momentum to go upward again. So we really need to hold this level. Otherwise, in my opinion, this is gonna be a short. This is a short. So when taking a look at these patterns, you probably see that this is an uptrend. Here we saw a rising wedge going down, hitting almost 75-80% of the target point. Right now we're sitting at also around 75%. I think it was like 75% of the target point. So we could end up ending here around this level, but we could also go down, and we must make sure that the body of the daily candle doesn't close below 42. If it does so, then this is going to be a huge sell for me. But for now, it still looks good. This could be just another bleep, another blink on the chart. I will dive deeper into the 4-hour chart as well. We had some positive, some bullish divergence, as you can see over here, when the bottoms on the chart are going down, but the bottoms on the RSI are going upward. Then this was the purchasing moment, but maybe we will even see another low on the bullish divergence. We have seen it here, over here, twice. Here we had the bullish divergence. This was your first purchasing moment, and then this was bullish again. So we might see another one. Maybe we've seen here one as well with bullish divergence, and then we hit upward. So this is what it looks like right now. It's looking quite good, and we must hold this 42,000. And what I wanted to show you on my exchange, my favorite exchange, is Binance. I use Binance a lot for trading. Okay, we're going to take a look at the depth chart, and this is one of my favorite charts, and I will explain why this is one of my favorite charts. Because on this chart you can see if there is a strong resistance support level around the area you'd also see on the chart. So for now, we know that this old resistance line might become a new support line, and I'm wondering if a lot of other traders see that as well. So when looking at this chart, we see that there are a lot of people that are willing to buy around this level, and this is 20k. So I don't think that these orders will get hit, but you can always put an order in for like 20k or so. But let's zoom in and see where the new support line is sitting. And if you take a look at this, you will probably see where there is a new support line. Here we see that there is a new resistance. This might also be a resistance, but this is a very strong support line. There is a huge buying wall around 49.85 or so. No, 49.9. I think it's 42. So a lot of people are willing to buy Bitcoin around this level. And we see that there aren't enough sellers right now. So for now, we can say that it looks like that this level will remain to hold. But we must always take a look at the depth chart and keep in mind there's also a spread right now, by the way, which is a positive one. Here demand and supply is coming together, and this is where you can see the supply and demand coming together. And when we take a look at the chart, we can also see that the volume on the chart is going upward, but the price of Bitcoin is going downward, and this is quite contrary. And also we see some divergence on the RSI when the bottoms on the RSI are going upward and the bottoms on the chart are going downward. So this is going to be the strong resistance support line, which was an old resistance and turning into a support right now. And also the depth chart confirms this. So for now, I will keep a close look at this level, and if we come closer to the 42, I will remain looking at the sell and buy walls, but for now it seems quite stable. By the way, good to know, I've had a lot of questions about buying Bitcoin cheap, and I wanted to mention that if you use the link down below, you will get a 20% discount on transaction fees lifetime. So only via the following link you will get a 20% discount on all your transactions, not only in Bitcoin but also altcoins or shitcoins or whatever you wanted to trade. Down below, use the following link. And for now, I would really like to thank you for watching this video. Make sure to follow me on Instagram and Twitter via Madelon Vos with a lower dash, and you can also find me on Twitter as well. And I will keep you informed this week, and I hope you've enjoyed this video, and let me know what you like to see more often on this channel, and also make sure to put it down below, comment it down below so I can make more content about these topics as well. For now, I would really like to thank you for watching this video. You can find me on Instagram and on Twitter. I will get you notified every day when there is news online about Bitcoin and macroeconomics as well. So I hope to see you again. I hope you've enjoyed this video. Please don't forget to push the blue thumb if you like this video and share it with your friends and your family. I hope to see you again next week, and for now, have a great week. Bye!